Compound interest is often called the eighth wonder of the world, and it's for good reason. This seemingly simple concept is one of the most effective ways to grow your wealth over time, yet it's often misunderstood. Today, let's explore how compound interest works, why it's so powerful, and how you can use it to your advantage for financial success. 1. Understanding compound interest. At its core, compound interest means earning interest on your interest. Rather than just earning interest on your initial investment, or principal, you also earn interest on the interest itself. This leads to exponential growth, which grows your wealth at an accelerating pace. Take a quick example. Suppose you invest $1,000 at a 5% annual interest rate. After 1 year, you'll have $1,050. But in the second year, that 5% applies not just to your original $1,000, but also to the $50 of interest you earned, making it $1,102.50. Over time, this compounding effect creates a snowball of growth. 2. Why time is everything. The secret to maximizing compound interest is time. The earlier you start, the more significant your returns will be, even if you're only investing small amounts. For example, investing $100 monthly at a 7% return starting at age 25 could grow to over $240,000 by age 65. However, if you start at 35, your total would be closer to half of that amount by retirement. It's proof that time, even more than investment size, can make a big difference. 3. The Rule of 72, a quick calculation. If you're wondering how quickly your investment might double, you can use a shortcut called the Rule of 72. Simply divide 72 by your annual interest rate to find out the approximate years it'll take for your money to double. For example, with a 6% interest rate, your investment doubles roughly every 12 years. 72 divided by 6 equals 12. This rule helps visualize the impact of different interest rates and how quickly your wealth can grow. 4. Turning compound interest into real wealth. To unlock the full power of compound interest, start early, reinvest your earnings, and avoid the temptation to withdraw. Each time you leave your returns in, you're building a bigger base for future growth. Consider options like high-yield savings accounts, stocks, and retirement accounts like 401ks and IRAs, where your gains can be reinvested and allowed to compound without interruption. 5. Beating inflation with compound growth. Compound interest is also a powerful tool for outpacing inflation, which steadily reduces the purchasing power of money. If inflation averages 2% and your investments earn 7%, your real growth rate is 5% per year. Over decades, this difference can dramatically improve your future spending power, allowing you to maintain and grow wealth even as costs increase. In short, compound interest is one of the most accessible paths to wealth for those willing to be patient. It doesn't require a huge initial investment, just time, consistency, and the discipline to let your money grow undisturbed. Whether you're saving for retirement or other long-term goals, embracing compound interest can be one of the best decisions you make for a secure and prosperous future. Start as early as you can, reinvest consistently, and let compound interest do the rest. It's a reliable way to build a stable financial future, growing wealth through steady, long-term gains.